biggest factor in hog prices is domestic demand. We're exporting a fifth, or a little over a fifth of our pork production. That means 4/5 of it is aimed at that domestic market. And the first thing to think about is how the economy goes, drives overall meat demand. If we can generate some growth, if we can push unemployment below 9%, meat demand goes up. Americans like to eat meat. We eat a lot of meat. We eat more when we got money in our pockets. And when the unemployment rate is high, people substitute pasta and rice and beans for meat production. So if the economy strengthens, we're going to see stronger meat demand. That'll help pork too. If, on the other hand, we slide back into recession, which seems quite possible, then we're probably going to see a softening in meat demand, and that's not going to help pork any. So one of the things that's happening is USDA and all the numbers indicate we expect a sharp drop in beef production next year, down almost 5% compared to this year. That's a big change, and if there's 5% less beef on the market, people are naturally going to want to fill in with other meats, and pork should capture a big chunk of that. So because of the declining supply of beef, and even poultry, USDA says almost 1% less poultry on the market next year. So pork is the only one of the major meats that right now it looks like we're actually going to produce more of. Less beef next year, less chicken, less turkey, but a tad bit more pork, maybe 1.5–2% more pork being produced in 2012 than this year.